G'day everyone, welcome back to Pete's Investing. Today is June the 3rd, 2023. This is the US crude oil price update. On our weekly, we're still in a bearish momentum, and on the daily it's broken up into a neutral. So if we drill down to each of these, on the weekly first off, our triple moving average of the price chart is still in decline. Likewise, the moving averages of the CCI 150, and they both align into a bearish momentum primarily. On the daily, you can see there it was bearish and it's moved up into a neutral positioning because one of the moving averages of either chart do not align. So we're currently testing this resistance here at 72.18, and it may possibly break through that in the coming days. Alternatively, if it bounces down from there, it's going to be in this range in the short term. So we'll see how that goes. Let's go to the hourly chart. Again, there's that range more closely looking at that. Again, I did have a bullish divergence here on the CCI versus a bearish divergence on the price chart, and that's still potentially in play. So long as this CCI keeps rising and the price keeps rising, that may break to the upside, in which case we're going to leave that in there for the time being. And the target area I've got there is drawn between that low and that high. And that corresponds with the 61% to the 78% level. So if I just zoom that out, bring it there. So it may possibly, if it breaks through this resistance, and it breaks above this descending diagonal, then that's going to be our initial target area. Alternatively, if it bounces to the downside, then it's probably, and it breaks below this support area, then it's going to invalidate this, most likely it's going to invalidate this bullish divergence on the CCI. Also, if I zoom in and draw another Fibonacci, let's see what this looks like between that low and that high. You can see there it's broken above the 61%, which is always a key area to look out for. Anything above the 61 generally means a change of direction, so it may well break through this resistance in the coming hours and days. Also up here I've got a back test. So that runs throughout the whole period on the hourly time frame. You can see there are a couple of average downs in that process. We don't use stop losses. We average down, adding to our positions. You can see there was a major averaging down process had we run this during that period, and that would have had that effect on your profitability. So to avoid that, we always reference the weekly and the daily charts. So if we don't see any long trades during that period, and that started back in November 22, you can see there November 22, there were no long trades during the weekly. And November 22, there's some scattered long trades during that period, but you would have ideally avoided those so long as the weekly wasn't showing any long trades either. That's how you would have avoided the drawdown there. So to understand how to trade this and other trading strategies, reference my Patreon page. We also do take requests from our subscribers. We also scan for weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.